Hello and welcome back to my channel. In today's video I'm going to talk about the importance of diversifying your assets. And I know it's a big word for some of you, so what it means is don't put all your eggs in one basket. And while this has always been important, the reason why I'm talking about it today is because of the recent collapse of the Terra Luna coin and of the Celsius network. So if you aren't aware of either of those, Terra Luna was a cryptocurrency that was really big, and then about 2 or 3 weeks ago it completely collapsed. And when I say collapse, I don't mean, oh, it went down 15%. I mean, it fell 99%. And this wasn't a small cryptocurrency either, it was one of the largest out there. Then just this past week, the Celsius network has fallen apart as well. And if you don't know what the Celsius network is, it is essentially a crypto bank. So what you would do is you would give your cryptocurrency to Celsius, and then they would pay you interest for holding it. And a big reason why people like keeping their crypto in the Celsius network is that they gave out really high interest rates, like up to 15%. And if you don't know, putting money in a real bank, you'll probably get about 0.1% or so. They might throw you a penny or two. But real banks don't really give you anything, and the Celsius network gave you a lot of money. However, in the past week, the Celsius network collapsed, and they're no longer allowing people to withdraw their funds from it, which is a disaster because the Celsius network is not insured by the government. So if the company goes out of business, the money is just gone, and there's no government protection for the people to get it back. And while you guys might not know what any of this is, they were both very large crypto entities that cost people hundreds of thousands or millions of dollars. And I've read several accounts on Reddit of people losing all of their money and even losing their house in some cases. So I thought this would be a good time to remind everybody, don't go all in on any investment. Because even if you really believe in this one thing, it's just not safe. While you do have a greater chance for a super high return, the odds are also much higher that you lose everything. Now, it might sound like I'm picking on cryptocurrency, however, this applies to everything, including the stock market. So for example, if you really believe in Facebook, which you probably don't because most people don't like Facebook, but if you really believe in Facebook, don't put all of your money into Facebook, because then if Facebook falls apart, you've lost too much money. Instead, if you really believe in Facebook, put around 5% of your portfolio in it, or less. The way that I get around this is by investing largely in different mutual funds and ETFs, such as SPY, which is the S&P 500 mutual fund. So what this allows me to do is to easily invest in essentially the entire market. So while my potential growth is lower, the risk is much lower. So if you made it this far in the video, please consider subscribing to my channel for daily financial videos. I watch my analytics every day, so I will notice if you subscribe, and if you don't, I might cry. But back to the video. Another example I have for this is with owning company stock. With an internship I had a few years ago, they gave people a lot of company stock as their retirement contribution. And the company had been doing fantastic. So it's looking great. And there's a lot of people who work there and they have around $1 million of company stock. So it has gone really great for them so far. And I personally believe the company will continue thriving well into the future. However, all it takes is one mistake and the company could fall apart. If they sell one item out there and it has a tragic mistake, the company's stock can fall apart and all these people's entire retirement portfolios could be ruined. And I know some people who work there did have typical retirement accounts as well, so they are more diversified. However, I also know of people who work there who completely relied on the company stock. And then it's important to be diversified if you have a lot of money in real estate as well. One example of how having all of your money in real estate could hurt you is just in the past 2 years with COVID. If you had all your money into, let's say, apartment complexes, and then COVID happens, and people no longer have to pay their rent for a certain amount of time, then if you don't have cash stocked up in investments in other areas, you could quickly fall apart. Because expenses will keep on coming, even though the people will stop paying their rent. Or another example is if you have all of your investment portfolio in one house that you saved up for years, and you bought it, and you're renting it out, and you're doing good, and then the neighborhood that it's in falls apart and it becomes much harder to rent, you would get less money for it, and the value of the house has gone down. So in review, just kind of be careful when it comes to investing. Don't put all of your money into any one thing. Try to kind of spread it out. You might have a little bit of money in crypto or a little bit of money in a specific stock, however, don't put too much in. And a disclaimer, I'm not a professional financial advisor, but I am the creator of the new Joke of the Day segment, which is coming right up. It is time for the Joke of the Day. Joke. Don't worry, I'm not having a stroke. Why does Humpty Dumpty love autumn? Because he always has a great fall. And I'm sorry to disappoint, but no bonus joke today. I just couldn't find another one that felt on topic. But check in tomorrow and there might be another 2-joke day. So anyways, thanks for watching my video. Subscribe to my channel for more daily financial videos. Like if you liked it. Leave a comment below if you have any comments on the video or any ideas for future videos. Thanks for watching.